Hello guys, welcome back. This is a faculty Sudarshan. As we are progressing in a previous session, completed somewhere around till plant and machinery. Now we are going to start with in-depth explanation of each item in that balance sheet. Okay. First, we'll start hits and contents of the balance sheet. Basically, balance sheet will have two parts. Balance sheet will have two parts. One is equity and liability. Number two, asset. Equity and liability. Number two, asset. Okay. First, we are in a position to learn equity. We are in a position to learn equities and liabilities. Sir, first clarity, sir. What is equity? That's my most important question. Equity is nothing but a liability towards a shareholder. Only towards the shareholder, nothing but capital. And it is termed as shareholders' funds. Equity is termed as shareholders' funds. It is not only termed as shareholders' fund, that particular equity is consist of share capital, reserves and surplus, money received against share warrants. These three things are called as shareholders fund. That shareholders fund is nothing but an equity. Why is it an equity? It is a liability towards a member. For example, there is a company Paul Limited. I am running a Paul Limited. I am a board of directors of Paul Limited. You are my shareholder. Assume Shakti is my shareholder. Shakti is giving me 1 lakh to do my business. He is investing in my business. He is my shareholder. That shareholder will be treated as an equity because I am liable towards that shareholder. That particular shareholder, I am treating them in a separate account called fund account, shareholders fund account. It includes share capital, reserves and surplus, and money received against share warrant. I will assure you at this end of this session, each and every item, line by line, to the depth, you will be able to understand. Okay, we will divide this session by part. We will see the introduction, then share capital separately, reserves and surplus separately, money received against share warrant separately. Now, equity clear. Shall I move on to liability? Shall I move on to liability?
Yes, sir.
Yes. The term liabilities means external liabilities, sir. Very simple. The term liabilities means external liabilities of the company. That very simple. If it is an external liability, it is a liability towards the outsider, towards a third party, like bank loan, creditors will be my liabilities. That particular liability divided into two, liability two. What are two liabilities? Non-current liability, current liability. Non-current liability and current liabilities. Non-current liabilities and current liabilities. Then one more item is there. Equities and liabilities. Inside equity and liability, in between. This is equity. This is liability. In between, one person will come and knock the door of Schedule 3. That person is share application money pending allotment. SAMPA. Share application money pending allotment. In between share application money pending allotment. Assume in between there is a door between E and L. That particular door or particular curtain is known as SAMPA. What is meant by SAMPA? Share application money pending allotment. So it should be in between the shareholders fund and non-current liability. So that is equity. Liability is divided into non-current liability and current liability. So there are four. 1, to 3 item. This 3 item in between, that is in between shareholders fund. Shareholders fund is what? Share capital, reserves and surplus, money received against share warrant. Money received against share warrant. In between, after money received against share warrant, this is the first item. First item is shareholders fund. Second item will SAMPA. Third item will be non-current liability. Fourth item will be a current liability. Are you able to understood this introduction?
Yes, now.
Yes, sir.
With this, I just want to close this. Then we will see it in the next video with a new topic of shareholders fund.